So this is for the winner.
3, 2, 1.
Draw.
3, 2, 1.
Draw.
3, 2, 1.
Winner! So what's your name again? I have
Navid.
Navid. Here you go, buddy. Now we're going to talk about some magic, i.e. fractals. Now, I don't often use fractals, but I have it there in my armory. I use it sometimes, and the reason I like it is that there are many things in nature that are cross-topic or there's certain mathematics in nature which you can find in all, everything from sunflowers to your iris to the universe to plants to how ice particles form. Fractals are a thing, and it's normally the golden ratio, which is why I do quite like it in trading, but it's not a handy tool to use on a daily basis. But sometimes it can be very intuitive. But the problem is it's very subjective. The way that someone looks at fractals on the markets will come up with a completely different sort of answer to someone else. This is why I don't like doing Elliott wave theory. Although it uses the golden ratio, etc., it's very subjective. And if you label something incorrectly, you'll absolutely wipe your account out if you don't do it properly. So I only use fractals when there's when you can use hindsight analysis as much as possible, but you still have time to give yourself a bit of an edge. So at the moment, I'm using fractals as one of the main things to forecast what's about to happen over the next couple of weeks, months, etc. And it's been incredibly accurate. So I did an egg update on the 4th of November to my egg holders. And basically, in this, I said, from the 8th of November onwards until perhaps the end of November, we're going to have another big leg down. And we're hovering around 20, 21K. And that we'd be making our way down to 12 to 13K, but with a pause at 16.5, 16 to 17K, I said. What's happened since then? Exactly that. I called it to the day almost. So the thing with fractals and stuff like this is that you've got to be careful of the 3 C's. Is it coincidence, correlation, or causation? I'm pretty sure that I could create a coincidental chart of Kevin Bacon EE adverts and the rise of, I don't know, sudden adult death syndrome. You know, you can create all sorts of coincidences, right? But that is purely coincidence. It's not correlation. They're not related at all. And it's definitely not causation. So Kevin Bacon adverts are not causing death, right? So you've got to always be careful. And this is the best. I love this picture because we see this in, this concept. We see it in everyday life on social media all day long, where people will be so damn sure of and convicted of their opinion or belief, and they're not necessarily wrong, and the person that they're arguing with on social media may also not be incorrect, but it's just a different perspective. We have one solid object here that's giving 3 potentially different outcomes. So that's something you have to be aware of. It's the same with trading. How I look at a chart, I'll come up with a completely different conclusion than someone else looking at a chart. And it's hard for the average investor because you get massive, super professional traders, Paul Tudor Jones or big investors like Warren Buffett, and you have all these mega traders or investors contradicting each other. So us, mere mortal plebs, are like, who are we supposed to believe? Are we supposed to believe Warren Buffett, who's obviously got a great track record, or are we going to believe Chamath Palihapitiya? It's hard. And then, so you've got to always be aware of coincidence, correlation, and causation. So this is a typical chart that we've been tracking over the years of the Bitcoin cycles, because Bitcoin has one constant, which no other asset does. And that one constant are the 4-year halvenings. So every 4 years, so for those who are not, who does not know what a Bitcoin halving is? Be honest, okay, there's fair few. So what happens is, when Bitcoin was created, every 10 minutes there would be a competition, a mining competition, and whoever could solve the mining riddle, let's say, would win the block. And so every 10 minutes, the reward would be 50 Bitcoin. So 50 Bitcoin will be distributed every 10 minutes. 4 years later, you have the halvening, and this is a pre-programmed part of the Bitcoin protocol. And it will go from 50 Bitcoin to 25, then 12, then 12 and a half, and now what it is at 6.25. So there's only 6.25 Bitcoin issued every 10 minutes. The next halvening, which will be around 2024, is then whatever's half of 6.25, 3.125, 1.25, yeah. So Bitcoin is programmed to be not necessarily a deflationary asset, but something where the issuance becomes less inflationary. So these lines over here, these solid lines, are where all the halvenings are. And so we can see that there is some sort of cycle going on with Bitcoin, because it has been mainly a retail-driven market. Institutions have not really dabbled with this other than the ICO phase in 2017, but it didn't affect the cycle. So we have basically a year of crazy rallying, a year of horrendous falling, and a year and a bit of consolidation or accumulation. You then have the halving, and then it goes nuts over the next sort of year or so. Then another year of crashing, another year of consolidation, etc., etc. So we're over here on this third epoch, or technically it's the fourth epoch, but there's not much data before 2013 really. So we've had our year of, as you can see here, this is a monthly chart. So 18 bars means 18 months. So we had 18 months of crazy rallying from the previous halving, and it went up 650% from the halving date. Then we had 13 months of bear market, which is where we are right now. And every other bear market has been 12 months, 13 months. And all the epochs, the timings are somewhat accurate. Now, when I was doing this and I was playing around with the percentage drops, the percentage drops for Bitcoin have always been about 80. So this was 86% drop, then an 84% drop. And the last time I did it, when it was around 20 grand Bitcoin, it was like 76, 75%, which, you know, is a nice big drop. But I just didn't think, with all the things you're about to see, that was the bottom. I didn't think 20K was the bottom. And that actually makes more sense for Bitcoin to do an 80% drop, which would take us to about 12, 13K. And the other thing that we need to be aware of is that everyone thinks once we've got this mega bottom in, whether it's 8 grand or 13 grand, whatever it may be, it's going to V-reversal back to the moon. Not happening. I'm pretty damn positive that is not going to happen. We will not see any crazy rallying until the SEC approves Bitcoin spot ETFs. And you've heard me say this time and time again. So typically what always happens after the bear market, we have a year, or here's 18 months, then 18 months, actually a year, 18 months of consolidation. And it never breaches all-time highs in that 18-month consolidation. So what I'm thinking will probably happen is Elon Musk even said 2023 is going to still continue being a bit of a recessionary / depression market in general. All big businesses are laying off staff left, right, and center. This is going to spill over into 2023. So it actually makes sense that Bitcoin will sort of stagnate for the next 18 months or so. But stagnation in Bitcoin doesn't mean it's just going to be a flat line. It means basically volatile ranging market. So although it may bottom out at, say, 12K, let's just pluck a number out, by the time it does its next halving, we could see up to 40K. But I reckon it's just going to be it will be oscillating up and down. So there'll still be tradable opportunities. I reckon you can still 2 to 5x your pot during this yellow phase here. So one of the other things is that Bitcoin is very sensitive to the US midterm elections. So the US midterm elections have always been early November. So in 2014, during that bear market, the midterm elections were these arrows, okay? So what you normally see is a run-up into the midterm elections, then a dump. Run-up, sort of a run, there wasn't much of a run-up here, and then dump. And here's this year, we had that run-up, and I said we're going to dump. And so when you're labeling fractals, it is very subjective, and it is hard because markets don't follow exact patterns. So you have to label pivot lows and pivot highs. So if you take the 2014 market over here, in the run-up to the midterms, you have pivot low, number 1. So the first one is always the easy one to label, number 1. You then have the reversal of that, which is 0.2. You then have a move down, 0.3. The run-up into the midterms, 0.4, dump, 0.5, right? Same as Shizzle over here with 2018. And then over this year, we have pivot low, 1, pivot 2, pivot high, 2, down for 3, up for 4, down for 5. It seems pretty obvious with there. But the thing with fractals is you have to try and argue both sides of the coin, even if one side of the coin looks obvious. So you have to do it with different time frames. Not necessarily alts, stick to Ether and Bitcoin because they have more of a tradable track record and there's more volume, so it's slightly more reliable. But even with this one, so you take from pivot high, so all-time high, so this is 2014, pivot low, reversal, sharp reversal, 4, 5, 6, 7, 8, 9, dump for 10, right? Midterms right here. If we then look over here for 2018, somewhat similar, all-time high, pivot low to 2, up for 3, that's pretty standard there, down for 4, big one for 4, up, as in from down here all the way up here to 5, then down for 6 again. Again, it's pretty accurate so far. Another big reversal for 7, big reversal for 7. That always catches people out. This move here, people normally start going, oh, back to all-time highs. That ruins people, that move there. Down for 8, up for 9, dump for the midterms, dump for the midterms. So 2014 cycle, 2018 cycle, pretty similar. Obviously, it's not going to be exact, but then when you compare now, what about now? So I've said a few times that the 2013 cycle is very similar to this cycle because 2013 had a double high, just like this cycle, we've had a double high. Almost the same thing. I'm not going to go through numbers, but you can see the similarities. That's basically what it is. And it also coincides with the midterms. 8 into 9, dump. 8 into 9, dump. And so I was saying that we should be expecting some sort of dump down to the 13K and below. And then, again, going into, this is, oh dear, I should have labeled whether it was Bitcoin or ETH, because I looked at both of them. But I won't teach you suck eggs. I then went onto a lower time frame chart. So I think the previous one, yeah, that's a weekly time frame. This is a daily time frame, just to get a bit more fidelity. Again, you'll have different numbered points because there are many different sort of pivot highs and pivot lows, but it always came down to the same conclusion. 0.12 is the dump. And we didn't have that dump on 0.12. This is when I was making that egg update video early November. And so for me, it was somewhat of a high conviction move. So then, although I was quite bearish, I then have to force myself to be bullish. Like, okay, take a step back, try and be as bullish as you can, try and curve fit to match your bullish mindset. And I found it hard. 0.1 down for 0.2, 1. I had to use that as 0.2, when in reality, I think that should have been 0.2. But either way, when I tried to, because I was thinking, wait a minute, what about this move down here? Isn't that the move down to 10? You can somewhat bullshit it, but look, I've had to not label this pivot high, which that's a big move. But the thing is, the midterm elections were out of whack, because here, it's midterms down into 10, but here we've had 10, but what about the midterms? Every time, I was chatting with Steve when I was going through this, and I was just like, there's no way I can squeeze this into a bullish outset. And so, yeah, this is basically what I came to the conclusion. We'd have, what is it? This is Ether. Yeah, so same thing with Ether. You can still do the pivot lows, pivot highs. I found it actually a bit clearer on Ether than Bitcoin. Again, moving on to a smaller time frame for the daily charts. You'll get all the slides in the video recordings if you want to analyze it a bit more. But every time I did this, I spent a good day and a half going through like every chart I could find, just labeling, constantly labeling. I remember there's one day, it got to about 4:30 in the afternoon, and I realized I hadn't had any water or any breakfast. And I was like, I'm hungry for some reason. And I was like, oh shit, been staring at charts all day. So yeah, and I think this is sort of the outcome that we'll end up getting. We're mid-dump. Is this Bitcoin? No, this is ETH. Yeah, this is Ether. And then, yeah. And then I was like, okay, let's try timing it. What about the times? So over here on the left, we had basically, obviously I did the normal labeling, but then I was, okay, how long did it take from all-time high to 0.5? 76 days. Okay, that's in 2014. Oh, so this is in 2018, and this is now over here on the right. So 0.1 to 0.5, 80 days. 76, yeah, makes sense. What about 0.1 to 0.6? 112 days, 146 days. Okay, a bit of a lag there. 1 to midterms, 297 days, 364. So it has been stretched somewhat. What about from all-time high to 0.12, as in that pivot low, that all-time low there? 242 days. So 0.8 takes us to, in fact, these, yeah, so 0.8, all-time high to 0.8 is 213, 221, that is somewhat accurate. And yeah, so I think we are still on track for hitting 0.12 down here this month. So this is why I've been saying between mid-November to early December, we should hit the low. That's what I'm working to. And in a previous trading pub, I said on the way down, we would pause between 16 and 17K, which is exactly where Bitcoin is right now. It's been oscillating between 16 and 17. So yeah, I think we are so close to these generational buying opportunities. This is literally, as Harry's saying, now is the time to be in the market and sharpening your sword. So where now? I think I've already given the punchline away. It's basically these two lines. So this is where I'm sort of expecting. This is where I'd like to get the bulk of the pot back in. So between 12 and 13K, I'd like to put 75% of the pot in at those levels. I mean, let's rewind. If you were to dump 100% of your pot into, let's say, Bitcoin right now at 16.5, you can still go home and pat yourself on the back. In 4 years' time, you amassing your whole pot at 16.5K Bitcoin, people would chop a leg off to have your entry point. That's like, as Harry said, back in 2018 when the pivot low was like 3,200, it's like getting into Bitcoin at 5 grand. So the equivalent 5 grand entry is right now 16.5. If you want to have some dirty bottom picking fingers, then, sorry, that's a really bad analogy. Ugh. I'm going to have a jelly baby. Sorry. Yeah, if you want to get some sticky fingers, then wait for 13 to 12, 12 to 13K. That's what I'm trying to not be too greedy at. And I think we could get some spike lows down to 8. So for a long time, I've called this line the Gandalf level. Thou shalt not pass. And I think just by looking at what's happening on Twitter and YouTube, annoyingly, loads of influencers and gurus out there are now starting to talk about that 12K Gandalf level and also this multi-year trend line here. So I think these are the two key levels. And because loads of YouTubers and whatnot are now starting to talk about 12 to 13K, there's going to be a lot of people diving in at those levels. So although the level's at 12K, it'll probably pivot. It could pivot at 13.6, let's say, or even 14, because everyone's going to try and front run everyone else. So we could actually get a teeny bounce around 13, but if there is, I still think there are existential risks to crypto, Genesis being one of them. They have to raise a $1 billion loan by Monday. Otherwise, they go pop. So Genesis, if you watch my recent YouTube video, I talked about Genesis, how the parent company of Genesis owns Grayscale Investments, CoinDesk, and a few others. But Genesis is literally the central crypto loan company for everyone. So if you have any platform that's giving yield on your crypto, they're getting it from Gemini or Genesis, which then go to Gemini and then to funds. But yeah, watch that YouTube video, it explains it all. But yeah, they need to raise $1 billion over the next 2 days, otherwise they go pop. So, and also don't forget that Alameda Research, you know, SBF, FTX, 60% of all Tether's usage was from Alameda Research. Like, Tether is still that gangrenous elephant in the room that just won't freaking die. Personally, I hope Tether blows up, personally. So we can basically rip the Band-Aid off, chop off the legs, and just get on with our lives. But yeah, so I think we could. I'm just waiting for one more clanger. And you know, there's many clangers out there ready to drop. So we could get a spike low. Now, I will miss, I promise you now, and I've never in my life been able to get the spike low. Never. And I don't think anyone here will be, unless you have a buy order at 8K or whatever. But we could see most of the bulk move down to 12, 13, with a temporary spike low to 8, just to touch this weekly trend level over here, to try and liquidate as many people as possible. And then we'll have some fanning around for the next 18 months, 12 to 18 months, I reckon. So, yeah, I'll give you a more accurate thing. So, in terms of actions on, this is why I think you can at least double your pot in a relatively short period of time. Because if you can get most of your pot in around 8 to 13K, let's just say 13K, we will be oscillating up and down for a while until the bull market properly kicks off. So we'll probably see a reactionary pump back up to 20, maybe 30 if it's quite exuberant. But it'll come straight back down to previous consolidation levels. So for example, we have been hovering around 16.5K for about a week now. That in itself is now creating a support level that will move on in the future. So if we do have a move up from, say, 13K back up to 26 or 25, and it starts making its way back down again, where's it going to rest? 16.5, yeah. So part of my game plan is accumulate around 13. Obviously, I'm not going to buy Bitcoin, but we're using Bitcoin as the barometer. Accumulate around 8 to 13. When it pumps up to 25, 26, cash everything out. I will literally take everything off the table, bang in that 100% net profit, and just wait for the inevitable retrace. Now, that retrace will be horrendously painful. And I've done this before. In 2018, I was waiting for this retrace. It took 6 months. So there may be a point in time where you'll cash out, bank your 100% profits, you've doubled your whole pot, woohoo! And you're waiting for that pullback down to, say, 16K. That may take months. And I promise you, that is going to be the most mentally draining period of your life. You think the bear market's bad? No. The pure FOMO that you'll have of going, oh shit, I've just cashed out at 25K, and you're still waiting for it to come back down here, and it won't just quite work. This bit here could take months. And if you look at other charts, it has been like 6 months before it pulls back, sometimes to this level, or even sometimes way back down to here, another spike low. So my game plan, obviously a plan never survives first contact, but is accumulate here, cash out 100% profits up here, buy in, and not be greedy. I'm not going to wait to come back down here because it may not. But if it gets back down to, say, 16.5, buy in again. So you're then, so then technically your new entry level is 16, but don't forget you've already bagged 100%. So if you look at the bull market confirmation, the real bull market confirmation is when you have the spike low, it will fanny about for a while, and it will always create a bottoming process. Nearly every single time, whether it's 2013, 2018, you will have a bottoming process. And whether it will be an inverted head and shoulders or a triple bottom here, bum, 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 bum line, it's when it breaches that bottoming pattern, that is the confirmation. Oh, this is solid. So I thought it would be like a wavy thing. That's the confirmation of the bull market. So from there to there, it was January to October in the 2014 crash. In the 2019, it was December to April. So there was real confirmation once it exited. But look, if we have a look over here, this one, it didn't quite come back to these lows, but it still went up and it still retraced quite aggressively here and also here. In 2018, this is the painful part that I went through in 2018, this is a confirmation of the bull market, or out of the bear market, let's say, be more precise. But it did have a couple more bites at the cherry here and also here, but they took months, best part of 6 months there. So to not be in the market during this can be quite painful. So I'm just trying to pre-warn you. So this is actually what I think will happen. I think we've got a bit more bottoming to do, whether it's 12K or 8, doesn't really matter. We will tease everyone around here for another 6 months or so. I actually think most of 2023 will just be meandering around, doing some oscillations. And then at some point, there'll be a trigger. And I think that trigger will be the SEC has finally come to a conclusion about regulation. And once they go, right, here are the bowling lanes, folks, this is regulation, all the corporates that are waiting to get in will finally have, thank God, we can now actually start acquiring crypto legally and compliantly, all that sort of stuff. And then once they say spot Bitcoin ETFs are allowed in the US, they're the two triggers. I don't think they'll happen at the same day, and then it'll be the explosion of the bull market. So, but I think, yeah, if you can get in around here, sell at about, up here for 20, get back in maybe around, it obviously depends, but I'm not expecting all-time highs over the next 18 months. I know a lot of people want me to say, it's up to the moon, but I'm just trying to be a bit more realistic. And don't forget, I know it's been horrendous, and personally, I've traded like an absolute muppet in the last 4 months. I've had not my best trading activity recently, but all of the profits come in a bull market. Now, you're probably thinking, of course, all the profits come in the bull market. But the reason being is that you have 3 attack vectors to make money in a bull market, whereas in a bear market, you only have 1 attack vector. So in a bull market, these are the 3 attack vectors. First of all, you have the spot peg. So the spot potential appreciation gain. So you buy Bitcoin, right? And as it goes up, obviously, if it goes from 10 grand to 20 grand, you've doubled your money. Great, that's the spot peg. You also have the yield peg. So if you're buying spot and then you stake it somewhere, not Ether, don't stake your ETH, you'll get tied up forever. But if you stake DOT, let's say, you're getting yield every day or every month. So that yield that you're getting is also going up in price as the bull market goes up. So you're getting the spot peg of your residual income. So that's great. And I've talked about that loads. And then also, obviously, you can do your active trading. So you can put the jacks under all that and make some profitable longs or long trades. But in a bear market, you haven't got the spot or the yield peg. If you have spot, you're just bleeding money, especially if you're yielding as well. So all you can do is actively trade to mitigate the losses. And again, that can go terribly wrong, which is what I've done. But as I said, spot ETFs is where everyone will be a trading god when that happens. If you are just in crypto before spot ETFs are allowed, everyone, you can get a blind monkey to pick some crypto, and that blind monkey will do well. So yeah, this will make everyone look amazing.